Okay, what's going on? What's going on? Good afternoon. Today is, like I said on the first stream, the best day in the world, my girlfriend's birthday, Tuesday, January 20th, 2026. What we're going to be looking at is our pre-market outlook. So what we had anticipated before the market open, before equities open, what actually happened, and some higher time frame context of why we chose some of the positions that we chose, and then what I anticipate to happen in the second half of the day. Now, we do have Donald Trump speaking today at some point, which could really bring a lot of volatility into the marketplace. So I do still believe that if we continue to hold, this area here of demand, 25,257s, that we could make our way up through the high of day still in those 25,450s, as we're respecting that 4-hour demand as well. So we'll look at the overall markets too. We'll look a little bit at YM and ES, but then I'll just really dive in on, like I said, higher time frame context, the entry I actually took today to have a winning day, and then we'll finish up with wherever the market's at, close to as we're closing out. So let me move this over here really quickly. Turn this down just slightly. Okay. Okay, so let's go over the Telegram, all right, because that's what we were really going to focus on here today. All right, was what we anticipated for today. Okay, so today I was looking at the higher time frame. We were trading inside of a higher time frame demand area with lots of rejections. The overnight price was down 300 points. So individuals who were shorts or in sells, right, were 300 points in profit from daily open, or if they, took it from like 300s or 350s, they were still hundreds of points in profit. So I was anticipating, since we were inside of a daily demand, that we were going to potentially see some more short covering and buys step into the marketplace. And then I said, if price continues to go lower, right, if sellers stay in control, I could see price rolling over towards the 25,000 whole level as the next major target to the downside, which we could potentially still see that today. But just going off what I'm looking at right now and what we'll look at, I still believe that we could make our way back up. So that was what we wanted to see. And then what ended up happening, just to kind of go back over that, when I'm talking about a daily demand, just so you guys have an idea, is when it comes to the markets, everything moves fractal, right? So the same things you're wanting to see on a small time frame, 1 minute, 5 minute, I mean, some of you guys probably 100 tick charts, you're going to see from a higher time frame perspective. Since, I would say, December 12th, 2025, I've been wanting to see at one point us return back up into that 26,100 area or higher to take out this liquidity. So like I was saying, when you look at the market open, which let me see if it's pretty clear on here really fast. On that far right screen, you can see more of the intraday, but when you look at, and I'll use the pointer here, but when you look at the daily open, right, which would have been for Tuesday, right, this is the overnight price. Overnight high was made, price went down, slipped the lows of 25,250 and fell all the way down to 150. So just rounding the numbers, we've got, from every purple line is about 100 handles, right? So purple line to here, so 25.4 to 3, 25.3 to 2, 25.2 to 1, right? So 1, 2, 300 handles to the downside, and they set a low in the London session, okay? And so when you're looking left, right, and you're looking at how that's happening on a daily, right, like I just explained how that went down, we're playing into a massive demand candle, right? So like people who shorted, I believe, like when it comes to, last week or positions, like say if you're playing CFD and you've got some holds, right, individuals are putting buy limits under this wick low, right, and they're putting buy limits inside of a demand candle, because essentially what I used to do all the time was I would take my positions and I would plot them. So if I had a smaller time frame buy position, right, and I plotted it, and it would come up, or like for example, let's say today I wanted to sell at New York Open for some weird reason, right? Let's say like right in here I wanted to sell at 8 a.m., right? I would plot that position and see what my location would be on a higher time frame. So like right when I do this here, right around that New York Open area, let's say you sold New York Open thinking that it was going to go bearish. Well, look where your area is. You're selling under old lows and you're selling inside of a demand area, a discount, right? On higher time frame to me, right? Not saying the price can't go lower. It's just saying for the intraday price, you would essentially be plotting a position that you would rather be anticipating two perspectives: sellers taking profit and buy orders filling. Okay, and that's just like how I see it personally, and just from looking at lots of charts. And so I already knew coming into this that I didn't want to sell into a candle like this on a daily, and I wanted to see continuation, because you're thinking about it from a perspective of, this is the high of day, this is essentially the low of day, right? Remember, like I talked about in the last streams, or I talk about on a lot of streams, is most people don't know what high and low is in the markets, right? And the concepts of trading are pretty simple. It's buy low and sell high. So essentially, to me, if you're trying to sell anything down here, you're selling low, right? And if you're trying to buy anything up here, right, at this point, right, like on this position here, if you're trying to buy anything at this point, you're buying high. So you're actually doing it backwards. And I'm not saying anybody specifically, I'm just saying this is what I've learned from my own personal experience of day trading. Okay, so higher time frame perspective, that's what we wanted to see. We wanted to see that area see a bounce, and then we'll talk every session that we come on to about point of interest. And point of interest is so you're getting in a position and playing up to point of interest. And then a mantra that I live by and trade by that really helps me to act accordingly is to protect or pay yourself at point of interest. Right, so if you've got a really nice position from New York and you push it up to daily open, right, most likely you're going to see people that were playing at 6 p.m. Central Time Zone, right, start to let go of positions in that same area. So a lot of the liquidity, a lot of the volume is going to be right around those areas. Okay, and so what we talked about, what we're going to see here on the stream is what we're going to talk about. We talked about higher time frame context. We're going to go into intraday structure. We talked a little bit about the key levels and why price is reacting the way it did. All right, so I'm going to show you guys the position I took and kind of walk through the specific area that we were wanting to see. Okay, and so I'm going to pull this over here. H1s, 15, and 5. Okay. Okay, so when you look at the New York Open, because me specifically, I love to play New York Open into about 11:15 a.m. I believe at this point, the market's going to present opportunities in that time frame, and define edge that you're able to capitalize on. And if you're not, then something could be wrong. Looking at the price, right, the very first few minutes of New York, we'll kind of go over that. Now, when we came out of New York, this is what price looked like. I mean, we really didn't have very much to work with. Price was already continuing up. So I really pay attention to the 825 candle on the 5 minute. So the 5 minutes before the equities open. And if you notice, if I go back in replay mode here, you can see it for sure. Right, they were already closing higher than the demand candle, like the intraday area I like to play, and so they were already putting people in what I call a bullish continuation type of setup. And so what I wanted to see about 5 minutes out before equities was, could we maybe roll back down? And here's something you guys can learn from me, and you can write this down, is that the algorithm loves 20 levels for buys, and it loves to see exits at the 80 levels for sell side, right? And so I wanted to see price come back into the demand. I wanted to see 25-20s, and I was wanting to frame up something potentially like this, right? So it would have looked like this. Now, when we look to risk something, we're thinking in probabilities and R multiples, right? And so we want to let price come to us. And I wanted to see a 15 5-minute structure break, which would have been definitely over, let's make sure we can see this clearly, over a 1 to 3 R, right? So that would have been a really good R, just getting right above those like highs that we had created here. And let me see where that London Open was, just to make sure. Was pretty much would have been the London highs, because the London highs were essentially like right here, 25 300s, right? So we're targeting the London highs and 300 just for like pre-market looking at it. But then as you can see here on the 1 minute, right, we just shot up like that very next candle right at the open. So 830 to 835, you had a massive candle. Now, what does this type of candle do? This type of candle, because it moved 105 handles in just 5 minutes, it creates FOMO, right? So FOMO, right, the fear of missing out, it just creates FOMO because now people are going to be taking this trade very late. They're going to be trying to buy it as it's breaking the London high instead of, taking it inside of an area that, makes more sense to frame up edge. And one thing I would say about a fast move when it comes to New York, right, because this would have been 832, 833, 834, 835, right? That first 5 minutes was right in here. When price came back down the 1 minute, I'm kind of showed where I was like, damn, I hesitated on an area, but here's something that can kind of help. When that 5 minute candle opens and New York opens right here and it makes this low, and then you have this candle print right here. So I'm talking about, I'm just gonna circle it. This candle right here print, and then you start seeing strength off that area. If you're gonna play a fast move, here's a tip I would say: understand where New York low is, which New York low at this point would have been right here, and then frame your risk off of that area. So if you're gonna get in fast, right, and you're trying to play that below New York open type of tap, then what you're going to do is you're going to want to always think from risk to entry, right? So this would have been, too much. I wouldn't have wanted to play this. Is why I didn't play it. But let's say you took it a little bit earlier, right? And you found that 20 point risk and you were just looking for it to slip above those highs like we talked about. Like it pushed up so fast in the first 2 minutes, like right here, right? And then it came back perfectly into that New York open price at 833. And then let's say you took it in that area. Use the current New York low as your risk, and then as soon as it breaks this high, you can start to manage that trade because you can see obviously it comes back at like 840 to test the same area. So you would have had to protect yourself. Now, me personally as well, I like to wait until the first 5 minute candle closes when it comes to NQ, because a lot of manipulation happens in those first few minutes. Now there is still going to be opportunities. We just seen that, but it's more likely that it's going to be a lot of chop in a situation like that, okay? And so going back to that 5 minute, you can see here, first 5 minutes, 830 to 835, it explodes up, 100 handles, creates that FOMO, and then starts to break back down as it's inside that 25,350 back into the range, right? And so as we start to come into the last 15 minutes of the hour is when I really started to lock in and wanted to see a position. So this would have been 840 to 841, and then 841 to 842. I seen that sign of strength. So what I'm talking about is like this candle here. Let me go back. This candle right here, right, was a nice sign of strength, right, in that area that showed me that, okay, they're defending that New York low, right? That New York low would have been like right in here. Yeah, so there's a New York low. It was defending that New York low and the point of interest, and then bouncing off of a half level. I like, for psychological numbers, I like half levels and I like whole levels. And so I was like, okay, cool. Hesitated on that. Now there was also another thinking, and when I say thinking in probabilities, is you're thinking from risk to entry. If you're going to enter off those 250s and you use that New York low as your risk, you're under the 20 point risk, which would have been pretty good. And then you're still just reaching for that most recent high, which would have been here, for over a 1 to 6 R, and that happened very quickly. Okay, and so that's one thing I've been noticing about my trading in general, especially with the way we know to look for specific things, that sometimes our day could be over in just a few minutes. If someone first told me when I first started, the real teachers, they don't tell you what to see, they show you where to look. And so that's where, if you know where to look, you've got to act on your edge without reservation or hesitation, right? It's also right here on my desk. So hesitated on that, didn't take the position, right? Just didn't like how it looked on 5 minute. I wanted it to still come to my criteria. I wanted it to slip that New York low first and draw on some liquidity. And then I said, okay, we were in those last 15 minutes of the hour. Price was starting to close a little bit higher and starting to build some pretty good bullish structure. I almost attempted here at the 849 to 850 candle, right? But the risk didn't really fit how I wanted, right? And so I was still looking at that same low, right? Like that New York low area. And then I was like, okay, maybe I could just use this right here, right? And to reach up to take it. So like right here, just playing like this down candle, playing this down candle to get up to here. Did not take that one either. Was just still waiting. And then the one that I did end up taking, and the reason why is because I met my criteria, right? I love to play on the right side of 5-minute dump candles inside of a 1-minute mitigation and what's called an NCE, so a next candle entry. And so the other confluence that I had that really helped out was that when I trade, I like to watch. I like to watch the Topstep, right? Topstep traders, right? Retail traders, because essentially at this 5-minute dump candle, so this one here, right? This candle right here, they were essentially wanting to sell this, right? So they were looking to continue shorts, right? And push it lower into the area that I was wanting to look for shorts to cover and to buy it, right? And so I'm going to move this. We'll use this here in a second. And so as soon as I seen them do this, and this was 9:15 and 9:20, I started to see on the order flow that price was still defending those 250s and was looking as if they wanted to go higher. Now, if you look at the area that this was happening as well, if you go back and you study like, you know, multi-time frame price action, you can see that like when I was looking at like a 15 before this was happening, what they were essentially doing were they were just filling the imbalances, right? So like when you go like this, right, they were just filling the imbalances of this area. So this right here to me was the imbalance, right? So like this area right here. And so they were just filling that imbalances. And when I can see a 15-minute wick tail, right, and a 5-minute dump candle, then I'm automatically looking for bullish continuation with a 1-minute mitigation as long as the criteria is being met, okay? And so that's what my eyes were seeing there. And then if you go up to just one more time frame, it was also tapping inside of, when you go to replay mode here, at that same time, this would have been, right, it's like right in here. It was also tapping into the 1-hour demand, right? So you'll see over time that people, I think, and I just know this from watching myself a lot, people make the mistake of what's high and what's low, and they're trying to get positions in the wrong locations. Okay, so that's what we were seeing from a higher time frame context before I ended up taking the position. And then when you see the price here, it was basically now this is the only thing I didn't like about this one was the timing. The timing was outside of the first 15-minute window of what we're wanting to see. But what was happening was, like I said, the NCE. So 9:19 and 9:20. Then you had a sign of strength candle, and then on the right side of that area, it started to show that it wanted to go higher. So this is actually the area that I was going to take it as well, but I hesitated on this area, right? So because it was like we had the 5-minute dump, right? I wanted to see that 50%. We had the NCE area, right? The risk was favorably good, right? And they were defending those 250s, but the way it looked, I needed the 5-minute not to just shoot up in one candle like that. I needed it to play back into my hand a little bit so that I could really frame up some risk. So I thought that this was a pretty good trade if it would have met the requirements of or the criteria of the time that I like to execute the trade. Now the trade that I actually did take for the winning day was a little bit higher than specifically that I usually like to take a trade, but it was the fact of, you know, again, seeing when the price came up and ran the daily open, right? So it came up and kind of ran up and tapped this area, that there was so many people going short, right, at 9:40 to like 9:45 a.m., right, going short, trying to push price back down, that I was like, well, they're going to continue this most likely back up, because I had already missed trying to attempt the 9:15s because it just didn't meet the criteria because of how fast that 5-minute candle had moved. And then my goal and target on the trade was going to get to you know, through daily open and point of interest 25,400, and then eventually reach up for high of day, which would have been basically hitting 25,450s. And so where I seen a move that really made sense to me was that, well, if I would have took this trade here, right, how would I would have managed that trade? So if I would have been in here, price moved in my favor, right, ran up, and then you get a down candle on the uptrending market and price starts closing higher, well, I would have moved my risk to where? To here, because you guys know that that's what I do, right? That's what I love to do when price moves in my favor. So it goes up, comes back down candle, uptrending market. We would have been break even on a trade like this at first, and as soon as this body closed higher, I would have trailed that risk, right? Because essentially, think about it: risking, if you're risking 5 contracts in this situation, right, and you have a 11-point risk, right, on that NCE type of entry, right? Let's say a 10-point risk. You're risking $100. Price closes higher than those 350s and leaves you a down candle uptrending market. You're now securing 55 points, which times $10 a point is $550, right? So let's go over the R multiple on that, right? Because you don't really care to think in P&Ls. You want to think in R multiples, right? But P&Ls is, I mean, it is what it is. But I'm just saying, right? So $100 risk, right? Price is in your favor at this point, 90 points, like $900. And what I'm saying is like right there, you're at a 1 to almost 8 R multiple. But what I'm saying at the same time, by risk management rules, is that if price reaches that level and you're able to tie off at least a 1 to 4.5 R, you're gonna, over time, if you continue to do that, you're gonna be profitable, right? Regardless of, how much size you're using on the trades, right? Now you do want to be consistent, I believe, with the size that you use, because like, let's just say this: I like to risk $200, which is 20 handles times my volume that I like to use, and so that way it's easier for me to think in R multiples. So if I risk $200 and I'm up $200 and the market's made money available, I'm at a 1 to 1, right? If I'm up 400, I'm at a 1 to 2, right? At 600, 1 to 3, right? So it's easier for me to think in R multiples as prices move into my favor in that type of situation. And so understanding how I would have managed this trade, that's what made me more alert, if that makes sense, for individuals who maybe don't have the same ideas that I have, and they buy what they can see, and they buy as price is already expanding. So most individuals, I believe, had bought instead of the area I would have chose, they would have bought somewhere like this, right, inside the expansion, and then price would have moved in their favor up to daily, and they would have most likely just moved their risk from 25,300 to the same area that I chose right here, right? And so the reason why I liked this setup was because it was the same situation. I had a 5-minute dump candle, but this was going to be here at 9:50 to 9:55. I had a 5-minute dump candle. You had Topstep retail traders seeing that rejection of those the initial, or not the initial balance highs, well, essentially almost the initial balance highs, and they started to short in a candle on the 5-minute like this, right? They started seeing this breakdown. They seen the crown form. Now, if you sold above daily open or 25.4s down to this area, great. That's pretty fire, because then you'd have to be managing the trade or whatever you have to do to secure a bag. But I mean, like, it definitely was from the daily open to the top about a 20 handle risk, and then you're playing down 70 points, so you're looking at over a 1 to 3 if you're managing that correctly. But I was still looking for price to continue higher and go through that HOD. And so where I ended up finding my position was part of my criteria. I wanted to see a draw on liquidity. So if you can notice, if people would have bought this area previously here and they would have trailed their risk, that essentially would have been the market coming to draw on liquidity because people had trailing risk there. And then being on the right side of a 5-minute location, I'm looking for a certain criteria on that 1 minute. I'm looking for a candle that looks like this on a 1 minute that draws on liquidity, right? I'm looking for one sign of strength, right? So this would have been that one sign of strength right here. And then I'm looking to frame up my trade in that second candle after the sign of strength, okay? So what I'm essentially saying is like they ran the trailing risk players, they gave you the sign of strength, and then they gave a candle to frame up, which would have been the second candle here, right? Going to that low of that candle would have been about a 12 handle risk, and I was just looking to slip above the highs here for about a 1 to 7 R. Now, me personally, I didn't have to risk the full 20 handles on this trade, right? I only had to risk 1250. So here's how I look at it when you look at it like this. If you're risking 10 points, right, you essentially could be, that's like an A+ setup, right? if you're risking like 10 points, it's like an A plus setup, right? Especially if you're going for anything to 100 handles, because you're looking at almost like a 1 to 10 R. And so if you're risking 20 for like 60, right, or a 20 for 100, however you want to look at it, those are more like a B plus setup, like an A B plus setup, right? Because those are my typical setups. And so what I'm saying here is, if you wanted to size, instead of doing 5 contracts for me specifically, right, I could have sized potentially into this with 10 contracts, making it basically a $20 per point move based on the R and R. Okay, but I kept the volume the same, and ended up just risking, like I said, to this low, wanted to get above this high. So ended up entering. So just kind of showing you guys how it actually worked out for me on the replay mode really quick, and then how I managed it. It was a very quick trade, because like I said, I kind of felt like the price was higher than I would anticipate it to, to work out. And then it looked like this. Okay. So you should have plenty of time to know how you're going to frame it up and how to define the risk. And so that very next candle, right, you get that sign of strength. Your mind immediately starts to go into this. After you see the sign of strength candle, you're looking to enter inside the second candle. Now, sometimes that second candle will take off, and you have to go ahead and know that you're taking it right inside. Let me make sure that you guys understand that this is a buy in this situation. You have to understand that you're taking it in this location, right? Because that's really what's going to matter. And so let's say you take a position here, right? Right, 5 contracts, right? Risk would have been the low of the market. I'm going to move that arrow just so it's not in our way. I'm just kind of using that to identify like the signal, right? So you have about to that low, you have about $157 risk, and then TP was just reaching right over these highs, okay? And so, right, this would have been 958, 959, right? And obviously it's not always going to work out just like that. But so then this would have been 9:59, and then this would have been 10 a.m. right? Now, when this candle closed, right? Now this is what I was talking about, R multiples. Essentially, let's round this up to about $200 per. So we're definitely at over a 1 to 2. In this situation, if you're at a 1 to 2 R multiple, you could go ahead and condense the risk down to a break-even trade. Okay, so you can even be a little bit in profit, however you'd like to do it, just to secure the bag and make sure that you're not susceptible to risk or flashes or just, Trump tweets or anything like that. Okay, and so now what we essentially were looking for going into the first 15 minutes of 10 was for price to complete through our TP, right? So immediately as price starts to move in your favor like this, you could start using the prior bar lows. Like if you're using a 1 minute execution window, you could start using those prior bar lows as areas to trail your risk. So like essentially what I'm saying is like you could take your risk, right, if you wanted to in this situation, and move it up to here and use prior bar low to secure the bag. You could use this one if you wanted to, because now here's the mantra: protect or pay yourself at point of interest. But for me personally, how I ended up managing the trade was I ended up having it still slightly at break even when we got to this area, and then price started to come down in that area just like that, and then basically made one down candle uptrend like this, and then that's when I started to pull it up like this, right? And then I was continuously to watch price, and price started to kind of come down again, and then it started to show strength. As soon as it showed strength, I ended up pushing this up to the 361s, and then we ended up kind of looking like we wanted to go for the target, but we were still, protect or pay yourself at point of interest. And then we were waiting here. This would have been 10:09, so we're still in that first 15 minutes of the hour. This was 10:10, right? Bam, target blasted, okay? And so target got blasted. That was the end of the trade. Now I could have continued to manage this up, but as you guys seen, I mean, that was a really awesome R multiple setup, right? We had the criteria, right? We had a target. We knew we were going to exit. We even had less, essentially, than, let's just do a 15-point risk in our mind here. We had less than our 20-point average, right? And then if we were just getting over those highs, we were looking at a 1 to 6 R multiple, All right, and so like I said, I'm gonna make a video later this week going over how you can, it doesn't matter, like how you can set these type of setups up and be a 40% win rate, right? And still be profitable, right? So like if you took 10 trades and you set them up all this way and you focus on R multiples and what you actually put out and what you get back, that you could win 4 out of 10 times and still be profitable, right? But it's like those massive red days or those days where you don't have execution on point that you give back to the markets, or it just doesn't work out because you're not framing it up a specific way. So this was the actual trade that I ended up taking. Like I said, it played out, really good setup, and like I said, I've come to realize that like you don't really need much, right, when it comes to these setups. 90, anything over 70 points, especially if you're risking 20 handles, is a really pretty good day. I think having less time in the markets is actually better, right, because you're more susceptible to risk and making like terrible decisions. So thought this was a really good setup, and it fit the criteria. Okay, and so now what we'll do is we'll look at the remainder of the day, because I did actually see that there was a potential for one other move essentially just like this, but it didn't meet the timing. So like I was kind of looking at price holding this 5-minute demand area on the way up, and this is structure. This is just typical structure in this area, and this is what I posted out to the group, was that if we can hold that 5-minute demand here on the left, all right, if we can hold that level without breaking structure, so line graph can really help to see that if you guys are new. If we could hold that area, then we were going to continue up through the high of day. And if we couldn't, then I seen us falling back into New York Open. We've already taken the New York low just recently. And then looking at a 15.5, now we're back into the areas that I was anticipating that if we're going to sell off, all right, then we're going to make our way back down into those 25,150s or below these relatively equal lows here from overnight, okay? And so second half of the day, right, this is usually when they try to do a lot of their craziness. But as you can see here, this daily bar is still very bearish, and it's not really showing any signs of strength. So when you go back and you look at like a 15.5, like I said, those overnight buyers are the only individuals I see that are still in the markets. And then the only imbalance area or inefficiency that we have on the way up is going to be right in here, right? So you could see short covering, right, a lot of the times inside of demand, but also inside of imbalances or inefficiencies in the marketplace, right? And so I'm not in the market personally right now. Like I said, I'm already out from taking that position that I had showed. But as I look at the second half of the day, right, I'm going to be watching something like this, right, looking at this area, seeing price under New York Open, see if it fails this area, or if buyers start to step in here in the last 15 minutes of the hour, right, and start to buy this back up to attack the sell side liquidity here at 25,400 and the 25,430s, and then eventually make its way potentially back above this area, right? So like looking at a 1 hour demand, right, the imbalances are inside the smaller time frames. What I'm essentially looking for is if they can close, right, bodies below this area here. If they can't close bodies, right, below this area here, I'm just going to do this for a second. They can't close bodies below this area here, right? Then essentially what they're going to do is shorts are going to start to cover in a specific area like this, I would believe, and then you'll start to see those buy orders start to fill to eventually go ahead and make its way through that high of day. But when you're looking at all three of the assets together, like 1 hour, 4 hour especially, you got to ask yourself, for me, right, for like I trade the Wyckoff method, what phase are we in, right? And based on the phase that we're in my eyes, is we're in a markdown effect, right? We still have quite a room to go here on ES. We still have some room to go down here, I believe 25,001 or below that initial balance low on MNQ. And so I personally wouldn't be thinking that we're going to see that today. And then looking at like a daily, let's just look at MNQ for example here. We could keep digging our way into this, right, into this daily demand candle, and then reaccumulate before we go higher. We also could just slip this low, right? 25,000, 24,900. But um, ever since we failed to break structure, right? So essentially we failed to take this, let's say the low of day, and then go higher than this here and actually close a body and then do something like this. Uh, I personally wouldn't want to try to continue to buy or do anything in the second half. But that's just me personally. It's not financial advice. It's just based on what I'm seeing from the price action. So, yeah. So, like I said, I went over the position that I seen. I went over the one that I hesitated and just kind of waited, which I was actually really glad that I did because it just didn't meet the criteria, and then was able to capitalize on that other position in that specific area. So, kind of looking at this, like I said, to kind of close out the day, I'm looking at these essentially right here as equal lows from the overnight. So I could definitely see them coming below these two lows in those 25,180s, 25,175s, and then filling this imbalance between 25,150s and 160s, potentially reaching into the low of the day demand area. But with it rejecting up there so strong at the point of interest and at daily open specifically, that just lets me know, looking at the daily bar at the same time here on my other window, that if we couldn't close above the daily bar with bullish structure, then that daily bar is probably going to be a bearish candle. All right, so yeah. So give me 1 second here really quick, take a little sip of coffee. Okay. And so now when you look at the 1 hour, right, and of all three, right, same thing with when it comes to any of these, right? We failed to break through on NQ, and then we seen the buys up that were pretty choppy on YM up to where? An 80 level, right? Algorithmic price loves to reject at 80s and buy at 20s. And so we've seen that supply candle be respected. We've seen the buyers exit that area, and then we've seen price just topple over ever since. So overall, right, as of right now, going into 1 p.m. and this 4-hour close, we're seeing some bearishness, right? And this 4-hour candle is getting ready to close in about 20 minutes, if you guys can see that. So I'll do this here, all right, on all three of these. And so this is a determining factor type of area, right? How this candle will close, how shorts will respond. Will they cover their position and buy orders start to fill and price actually go back up? Or are we going to make a deeper retracement below 25,095s and down to 25,050 to 25,000 whole level? That's essentially all we're looking for to see, right? So seeing how price is presenting right now, looking at these levels here, I would anticipate buy low, sell high, right? Like I'm not going to want to look at a position, right, until it gets to the fib retracement. Now we'll talk more about fib retracements, but the best trades usually happen at the 71 to 78.6% retracement. And so looking at this, I'd love to see a draw on liquidity and then possibly reaccumulation inside of that imbalance, so like what you're seeing here, right? And then if you guys are looking left, it's inside that 78.6, see something like this, to then, if it's going to do that, then go up. But as of right now, I'm pretty sure, we're going to go take that London low and that initial balance low of the day. So just depends. Just be ready, have that understanding. Like if you're looking at like a 15 and 5 for your executions, just have an understanding of like, this is the low, this is the high, and then where the Fibonacci retracement is of that move, right? Because if I don't see personally any candles on a 5-minute close below this candle here, right, and they start to hold this area and start to build structure on the right side of this candle here at the right time, the last 15 minutes of the hour, I could definitely see the individuals who shorted a position up in here start to cover because they're not getting their limits or their take profits, right? So their buy limits or whatever that they've set for TPs, if they're not getting delivered, they're gonna market execute buy, and that's when you start to see price fly. Now, I was always taught if you're going to buy, especially second half of the day, you want to be buying below opening price, right? So, of course, we're under the daily, but you'd want to be buying and looking for signals under that New York open price as well. And so, we'll see what happens for today, but that's pretty much the trade review for me today. Like I said, I ended up taking the position I showed, which was here, met the criteria of time, met the right R multiple and probability factor that I was looking for, and then had a good target on with a higher time frame target that we wanted to deliver, and it didn't, and we were able to manage the trade effectively. So when we come back, what we'll see is how price reacts inside this area. Do we hold in this area? Do we slip down to 25,150, reaccumulate in that second half, and then go higher? Or was that the rejection that we wanted to see for a little bit higher time frame, right? Weekly, daily, and we're going to slip lower into the 25,000 whole level. And then potentially, I would say our next target, if you're really looking here at the daily, would be these 25,900s. But as you can see, if you look left, right, on that weekly, that would be this weekly wick into the weekly demand. So, I would think if someone's shorting or if someone has CFD shorts, they're looking for a specific breaks of structure or certain criteria like this to exit those trades. And you got to understand that when individuals press take profit on shorts, basically on the other end of that order is a buy limit filling, or a buy order filling, excuse me. Okay, so one last thing. So yeah, we'll leave it at that. I'm gonna make sure that we didn't say anything else on here that we wanted to cover. We covered the intraday structure, we covered the price that we took today, and we covered everything higher time frame. So I appreciate you guys watching this. Let me know if, like I said, the volume or the quality or anything like that can change. But we'll be back again tomorrow, and let's continue to stack winning days and just get better and better. Have a good day.
What you want to do is save hundreds.